So what's good, guys? Welcome back to my channel. In today's video I want to show you my approach when it comes to trading high impact news events. Although most trading gurus will tell you that trading news is gambling, I will show you what you have to look out for to get the odds on your side and successfully trade high impact news events. So as always, before we consider taking any trades, we always have to establish our bias. What is the overall drawn liquidity? That's always the first step. And if we take a look here at the pound weekly chart, what we can see in the last few weeks, we have taken out the previous year's high and had the double sweep of that previous year's high. You can see here we had the initial run of that high and then a second sweep of the first manipulation. And after we have seen that sweep, we have now seen the weekly chart trading or retracing it back into the range, and also the previous weekly candle has created a weekly swing high, right? So after we have taken out the external liquidity being the previous year's high, we can now look for potential trade back into some internal liquidity. What are internal liquidity pools? Basically, if we take a range, so we have the swing low to the swing high, which is our range, then we can look for internal liquidity pools, which are either fair value gaps or swing highs and swing lows. Fair value gaps are the lower time frames, also always created by a swing high and a swing low. So fair value gap or an imbalance and a swing high and swing low are basically the same liquidity pool, right? So if we check now the present weekly dealing range, we have the recent swing low where we started to move into the previous year's high, and we have now the swing high after the double sweep, right? And now we can mark out the internal liquidity pools, and as you can see here, we have that weekly swing low here, and we also have that fair value gap right below. So we have two potential draw liquidity, which could act as an internal draw after we've now taken out the range high. So once we are done with the weekly analysis, we drop down to the daily chart to further get any insights on the daily chart, right? So as outlined, that's the drawn liquidity. And now if we take a look at where we are trading, we can see that the last week we have left behind quite a lot of unswept previous day's highs. You can see here we have this previous day's high, this one, this one, this one, and this one. So we have quite a few of buy side liquidity built up by the previous day's highs, which we have not been able to sweep. So before we look for price running that low, we want to see early in the week some manipulation to the upside. So if we think about the weekly open high low close, we want to see price opening up, trading the high, taking some of those previous day's highs, and then we want to see expansion into this low at least, right? We also can mark out previous week's low. So that would be the potential narrative heading into the next trading week. Then also, what do we always have to check before we frame our narrative? We have to take a look at the economic calendar. So if we take a look for this week, we have Monday bank holiday, so we don't expect any large movement. Then Tuesday, we have the initial first news event on pound, and then on Wednesday, which was the day of today, then we have CPI, right? So CPI is one of the most important news events, so therefore we can use this one as a potential trading day. Also, if you think again about the weekly open high low close, we can see that we have Tuesday, Wednesday, and Friday we have news on pound, right? So if we have 3 high impact news and we want to anticipate initial move upwards early in the week, then we can argue that maybe the first news event will be the manipulation, and then the second or the third one will be the true move, meaning the expansion into the sell side we have marked out, right? Let's see what Monday is doing. And as we can see again, we have a ranging profile, and again we fail to take out the previous day's high. Then also, if we check the daily for potential key level, we can see that we have this up close candle here. And as you guys know, in a bearish order flow, all up close candles should act as resistance in price. So we have this up close candle, and within that up close candle or below, we have 1, 2, 3 previous day highs. So we can mark those ones out. So we can see here we have this daily candle range, and you can see here we had 2 inside bars. So now that we have seen manipulation of those previous days high, and we closed back on that daily candle range here into the key level, we want to look out for level or an hourly setup that might form here now. So we drop down to, and as you can see here, we have seen price running that high right into that daily key level. So now we check the hourly, and what do we see? The same thing I just outlined on the weekly chart, we can now see on the hourly. We have a double sweep of that daily high, right? Daily high, initial sweep, and then the second sweep. Anticipating a reversal at the key level, you will often see a double sweep occurring. So we can see here the days of the week, with Monday here being a ranging profile, and then as we have anticipated, Tuesday, the news on Tuesday, pushed price higher above that daily range high into the key level, and we have seen a double sweep. And now what happened, if we take a look at the low, which made the last higher high, right? We closed below, and we left behind this bearish hourly order block, right? So we have now a new level, a new key level on the hourly, which we can use to frame short ideas into the current weekly low or the previous week's low. And right below we have the weekly low we have marked out on our weekly analysis, right? So we know we have CPI coming up right at London session open the next day. We want to see what price is doing heading into London session, right? So the new daily candles opening up here, and what can we see? Right on the daily open, we have engineered this hourly week high right at the bottom of that hourly order block, right? So we have engineered a high here below the hourly key level. Again, we use the same logic we applied on the daily. Key level, engineered liquidity, key level, engineered liquidity, right? So now what do we anticipate? We want to see a run of that high. This could be in Asia or London session. If we get a run of that high during Asia session, then we expect London to be a continuation. If you want to know why, then watch my video on session profiles. That's exactly where I explain the logic behind the London continuation profile. If we don't get any manipulation in Asia, then we expect London Open to make the manipulation above that high, and then we want to see a London reversal profile where London makes the high of the day and then expands into our draw. So now all we do is we have to wait what Asia is doing. So the way you can trade news, there are 2 ways you can trade news. You either use the higher time frames and enter pre-news. So you want to use a higher time frame invalidation level. In this case, let's say you short above that high, right? Because you anticipate a manipulation above that high into the key level, and then your invalidation would be right above the key level, being that order block, right? So entry, invalidation, and then take profit would be the previous week's low and the overall weekly swing low, right? As mentioned, if we get a manipulation in Asia, we expect London to be a continuation, and if not, we expect London to make a manipulation and then see price running lower. And as you can see here, there we get our fill, right? We have that manipulation above that high right during the Asia session. So now we are heading into the London session, right? And we can drop down to the M15. So what do we have here? We have the high manipulation, and we have news coming out in the next M15 candle. As we have seen manipulation pre-news, we want to see news to expand price without manipulation, as we have already seen the manipulation prior to news, right? So therefore, we expect expansion. So what do you take away with that? If you want to trade news and we want to get into a trade ahead of news, we also have to see manipulation ahead of news. If you have no manipulation pre-news, you don't trade pre-news, as you then expect the news to be the manipulation. All right? Second thing you want to look out for, you want to look for a key level where we can base our invalidation off and where the manipulation into that key level can happen. All right? Then the third criteria, the trade should be in the direction of the overall higher time frame bias and order flow, right? You can see here the trade is a sell setup, it's bearish. The overall order flow on the daily and hourly is bearish, and the drawn liquidity is obviously also to the sell side, being also bearish. So the three criteria you always want to look out for is manipulation pre-news, higher time frame key level for the invalidation, and aligned with the overall bias and higher time frame order flow. All right, those three criteria you always want to look out for. Now let's see how the trade plays out. In the next M15 candle, that's where pound CPI will be released, and we expect price to straight away expand lower into the sell side. And as you can see, price expands straight away without another manipulation into the previous week's low and also into the weekly overall draw on liquidity. So if you learned something in this video, I would appreciate a like and a comment, and see you guys in the next one.